Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your risk through our proprietary market signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Monday, April 6th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. Another very volatile session today in the S&P 500, this time really to the upside, up 7.03%, and we closed at 2663.68. What we're looking at here is a one-month chart of the S&P 500 where each candlestick represents 1 hour of trading, and the blue annotated lines are the 2350 support area and the 2600 and 2640 resistance area, where we've been kind of playing around and flirting in this area for a while. And as you can see, we had 1 hour today where we closed above that 2640 level, again closing at 2663.68. Now when we look at a one-day chart, each candlestick now represents 1 minute of trading. What we can see is we had a huge push in the last half hour of the day. We were trading underneath this 2640 area, which again had been acting as that overhead resistance level even on the 1 hour candles as we see here. But during that last half hour of the day, we started to push above the 2640 area and then went straight up there shortly after 345 and hit the highs of the day just around that 2675 area and then pulled back and again closed at 2663.68. Now, it will be important if this rally is for real. And guys, it's so early into a bear market that I would be really careful here. And these days where you're up 7% in one day on the back of some good news, I always look at these things with suspicion because I am a student of the markets. I've got decades of experience trading in stocks and options and decades of financial services experience. And I'm telling you guys, these huge up days like this generally only happen in bear markets. So be super careful here, okay? If this is for real and if we've seen the worst of this bear market and if these are the lows, we're going to continue to need to see closes above this 2600 and 2640 area, especially for the next few days and next few weeks, which would take us back, above the 2700, 2750, 2800 levels. So that's what it will take. And, is there enough good news out there? Are there enough knowns? Because from what I see, there's too many unknowns for this to be a sustainable rally. And again, when we're up 7% in one day, I always am super cautious because my experience is those rallies just are very hard to sustain. So be careful here. And also remember that during the last 2 years of our bull market, and what we're looking at here is a 3.5-year chart where each candlestick represents 1 week of trading in the S&P 500, and the line chart is an overlay of the MS World X US Index, okay? So during the last 2 years, actually a little bit more than 2 years of our bull market, we had seen weakness in the global market, okay? So again, this is the MS World X US Index. There's 22 different developed countries represented in this index. Again, that's the black line that's overlaid on top of the S&P 500 index here. And this MS World X US Index is comprised of over 1,000 holdings, okay? So there's 1,000 holdings from 22 different countries around the world, minus the United States. So it gives us a good opportunity to take a look at around the globe and see in the aggregate what was happening over and above what we were experiencing in the S&P 500. And you can see that this MS World X US Index peaked in January of 18, okay? And then, it got up and kind of, hit towards its highs a little bit in January of this year, but we never really even came close to hitting the peak again that we saw in January of 18, all right? So a really healthy market, guys, is like 2017 here, where we're going up and the rest of the world is going up. That is a good scenario. But when we're going up, with choppy action, of course, and the rest of the world is sideways to slightly down, that is not a great setup. So we had global weakness even before we peaked. And I'll show you over the course of this week in some other charts that the things that were working for us here in the United States, the sectors that were the strongest going into the tail end of this bull market that we had that obviously ended a few weeks ago, the sectors in the S&P 500 that were actually working the best, a lot of them were not the sectors that you want leading the stock market, okay? So just understand that, yeah, it's awesome that we had this huge up day today, but again, these big up days, always look at them with suspicion, right? You know, we need to make the market prove itself and follow through in order for this to be real. It's super early into a bear market like this with so many unknowns and such potential for downside. It's so early in this bear market for us to a bottom that statistically it's unlikely. Is it possible? Of course it's possible. But for us to have already seen the lows here this early into a downturn, you know, this is our 7th week since we peaked back on February 19th. Guys, it's just so early in the process that statistically it would be unlikely. It's always possible, but please be careful because these markets are not as strong as what a lot of people think they are. And I think there's a lot of people that are in denial as to how dangerous these markets are, okay? Now, one other way I can help you is with Simple Market Signals. That is my proprietary model that I developed for my own personal trading and investing. I worked on this for over 20 years, guys, because I was obsessed with trying to figure out a consistent way to gauge risk in the stock market. And it works extremely well. It finally came together for me in 2017. Now, what we're looking at here is a chart of the S&P 500 for 2018, and I've made a few annotations to give you an idea of how these signals work. Now, the signals, I've distilled them down to a simple green, yellow, red. The model behind the scenes, if you will, is very complicated. It's based on the stock market itself. There's numerous data inputs, okay? You know, technical analysis, intermarket analysis, so there's a lot that goes into the model, all right? But I've distilled it down to where I can then share the information with the general public in a simple green, yellow, red format. And what we can see here and what I have found in working with the model is that you're really only going to make upside progress in the stock market when the signal is green, as you can see here in 2018. And 18, you may remember, was a very volatile year in the stock market, which is why this is such a great, makes a nice little snapshot to show you how the signals work, because there was so much going on and the market actually finished negative. The S&P finished negative in 2018. But you can see here that during the green signals, the market goes up. Once it turns yellow, like right here where I've annotated with this vertical line, and then it goes red, and I just aggregated the yellows and the reds together to keep the chart a little cleaner. Otherwise, it would be so hard to understand what was going on. But you can see that it's very hard to make any progress, right? Very hard to make money when the signal is yellow or red, right? It's just going to be choppy to sideways, or slightly down, right, on the yellows, and then it can go really down on the reds, like over here, all right? Sometimes you'll get a short little signal here on this green, right, where you might get in and out around the same area, or if you get out on the yellows, right? It depends on how each person has to choose how they work with this, but I just want you to understand conceptually how this works. The yellows are going to be a sideways to slightly down signal, as you see here, but most all of the upward progress in the stock market is going to be made only in the green signals. And again, I want you to understand that, and I'll tee up some more information here in a second so you guys can really get your head wrapped around it for anybody that's interested in learning more about this, because it really, really works and it's very effective, okay? So whether you're trading directly the S&P 500 like the SPY or a mutual fund or another ETF that represents the S&P 500, or if you're DIA and the Dow, or the triple Qs, the NASDAQ 100, or individual stocks, the general direction of the stock market is really, really critical. And there's so few people that pay attention to this when they're trading and investing. And it's really a shame, because getting the market right is one of the major key factors in being a successful trader or investor, okay? So please spend a few minutes here and take a deeper look at some of the information that I'm going to tee up now. And don't forget to subscribe to this channel for ongoing finance, stock market, and success information and videos. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that Simple Market Signals, this is not for day traders. So if somebody has a really short-term time horizon, Simple Market Signals probably is not going to be for you. Simple Market Signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then Simple Market Signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about Simple Market Signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of Simple Market Signals, including my background and why I feel that most people are going to need Simple Market Signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing Simple Market Signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing Simple Market Signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, you know, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how Simple Market Signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts, and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how Simple Market Signals would have helped you, the video here, S&P 500 2000 through 03 using Simple Market Signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.